protecting Main Street from Wall Street. It's time for Money Unleashed with Eric Johnson and Kyle Allyn.
You have to have a plan where you know if the market's going to go up, what happens next. And you also have to have a plan where if it doesn't go the way you think, you know what you're going to do.
It's time to put you back in control of your money.
I'm not trying to predict the weather, which is kind of what we're talking about, right? It's predicting the stock market. I'm trying to build a better boat.
This is Money Unleashed with Eric Johnson and Kyle Allyn.
This is the Money Unleashed podcast powered by Hoffman Financial Group. I'm Eric Johnson. Alongside me is Kyle Allyn, as always. We got new episodes coming our way every Friday, so make sure you're subscribed to Money Unleashed wherever you get your podcasts. We are going to talk about human emotion and what it does to us and involves our money. And one of my least favorite ones is panic. And when people start panicking, they want to get away from their disciplines and investing in the market, right? It's called panic selling. And this can be a problem if you freak out and you, let's say for instance, the market goes down 8.5% and you just sell absolutely everything. It's a bloodbath and it's just sell, and now you're all in cash. Okay, well, you protected yourself in case it goes down another 8%. But here's the problem with that. You just took an 8.5% loss. Oftentimes when these little corrections happen, they bounce right back up, which means then you want to get back in the market and you're getting back in at higher prices than you sold, which effectively means you've lost twice. In the spirit of trying to protect yourself, not only have you reserved a loss, but the insurance of making sure you didn't lose more has actually cost you more getting back into the market. I don't really like panic selling. Panicking never made anybody any money in my book. So I want to talk about this panic selling, why people do that, the emotions around it, and how we can help people not do these big mistakes.
Yeah, one of the things that I found, because we keep talking about the move of the S&P 500, so if you're hearing us give these quotes on how far down the market went, we're talking about the market in total.
Yeah.
Well, if you're someone who owns a bunch of NVIDIA, you're like, hold on, I went down 30%.
Yeah, I went down
NVIDIA.
30 or
so since November,
Bitcoin or
Bitcoin, or there are a lot of these positions, these mega caps, these mega scalers that have taken some real heat, right? So I saw two things. One, I saw something online that I'm going to read you, and then the second one was actually a discussion with a client. So I want to give you some ideas of what people feel like sometimes, right? So we're dealing with this idea of sell-off. It was the fifth fastest, 10% correction from the all-time high. So it's a little scary, and I almost caught myself being a bit dismissive and saying, hey, this happens all the time, but it's like, hold on. For some people, this is fearful.
Yeah.
Right? So this
100%.
This is a gentleman online. I don't know how old this person is, but they wrote a post on X, on the old Twitter, and it said, I broke the number one rule. I panic sold. I've been investing for 3 to 4 years now, mostly in VU, so the market, and NVIDIA, which is a high-tech stock, with a sprinkle of BTC. So they're in these growth-oriented things like Bitcoin and NVIDIA and the stock market, right? I've never cared about red days or green days. I don't bother following the market. Now, I'm not going to read the whole thing, but what he essentially says here is he generally isn't a very political person, but he does lean in a direction where he doesn't feel good about what's going on. So I don't know if he's on the blue team or the red team, but when he hears about tariffs, when he hears about what's going on, it makes him extremely nervous. What he goes on to say is he sold every single thing. So far, it helped me dodge an additional $20,000 to $30,000 loss, but now I'm holding a cash position and I can't figure out what my next move is.
Yep.
Right? So this happens to clients sometimes where they're worried about politics, they're worried about the world, they're worried about inflation, they're worried about recession, and they go full cash, right? So you can see the dichotomy here. He's in Bitcoin, he's in the NASDAQ, he's in NVIDIA, and then he goes full cash. So the first thing I would say about this is he's kind of barbelling. He's going as far into growth as he can, and then he's going as far into safety as he can. And I don't think that he understands that there are options in the middle.
Yeah, there are options in the middle, but
right?
That's why you need to go speak with an investment advisor.
Exactly. And then I'll give you the second one, and then I want your take on this. So the second thing that happened was a client came in. He's been a client for a couple of years now. He's worth $5 million, but he brought his wife in. And he reiterated to me that the reason that he hired our team was he's a great investor. He's very comfortable with the markets. He's been successful, but he wants to make sure someone is in place if something happens to him for his wife.
Right.
So she came in, she sat down, and it was such an interesting interaction because he was kind of where I'm at. He's like, this doesn't bother me at all. But she was so concerned. And so when we looked at it, she's saying, hey, I lost $150,000 of a $5 million portfolio.
Yep.
3%.
Yep, 3%.
Right? So to him, no big deal, doesn't matter. To give context, they're in a position where they live off about $200,000. So if you do the math, they could lose $1 million and still have the income that they need. So if you're sticking with me here, he could take on a lot more pain and be totally fine.
Right.
The good news is for him, we've built a portfolio that will not be in that position. It's very protected. It's very comfortable. It does have a little volatility because since he has more than he needs, he's got some nice growth stocks that they're building for the future for the kids.
Sure. If he's got the rest of his portfolio is sound and taken care of
Exactly.
properly, he doesn't care about the ups and the downs because he knows over time it's going to continue to rise.
But do you see that when you have the ability to understand that, he's worked with lots of financial advisors, he studied these things, he really understands them. There's almost zero emotion for him. But then when his wife comes in and sits down, she says, all I can think about is what could have been done to take care of the family with $150,000. Right? So it's this dollar viewpoint as opposed to the percentage.
You nailed it, because that's very simple. Because the gentleman's looking at the percentage thinking, well, that's not bad. But she's looking at the dollar amount going, holy smokes, what could we have done for $150,000, right? So it's a difference between being a retail investor and every dollar that you're holding on to as tight as you can, and the difference between working with an investment advisor or somebody who works with percentages, because that's a world we live in, right? So what percentage do you go up? And that translates to dollars. So what he's experiencing and she experiences is kind of the same thing when you have that type of money. When you have $4 to $5 million, that's when you get to really witness the laws of large numbers working together in your favor, because the smaller percentages that you have, the more real money that looks like to you.
And think about if you're someone, we're talking about a couple here. Let's say that you're in a position that she could be in one day, and I don't want to put bad things into the world, but let's say he passes away and she's managing this money. She's keeping her eyes on it. Let's say she doesn't have $5 million. Let's change the scenario. Let's say she has $500,000.
Yeah.
Oh, boy.
That's much different.
Now the fear feels unsurmountable. So one of the things that I think is incredibly important, and it's always something I want to reiterate to people, is you're going to go through times that you cannot get ready for. No matter how hard you train, no matter what you do, it's just how fear works, right? You run out into the worst scenario in your mind and in your heart, and when it comes to retirement, you do not have time to recover. So, do you need a financial advisor? Absolutely. Do you need a financial advisor for every single thing you're doing in retirement? Maybe not. But to have someone on your side in these moments of volatility, in these moments of pain, it is so big. And he looked at me and he goes, I am so glad that you're here to remind her and to help her and to give me the clarity that if something happens to me, somebody will take care of her when she gets nervous.
I bet he's also glad that somebody other than her husband was telling her what was going on. Because you and I both know that when you're married, you say something to your wife, she's like, you could be the greatest master of whatever you're talking about. She still thinks you're an idiot, right?
All right, so if you're out there and you need me to sit down with your spouse, whether it be your husband or your wife, I can do that. We can help you through that, right?
Yeah, well, that's part of the game too. I mean, wives don't want to hear it from their husbands. They want to hear it from a third party.
And sometimes the husbands don't want to hear it from the wives, right? The other side of the coin.
That's also true. Like, the wife could be spot on and they're being way too aggressive for the time frame they need for retirement. And she's like, we got to back this down, man. And he's kind of addicted to the up and up train, So we see all sides of this thing, when people come in here and talk to us. But yeah, it is important to have an investment advisor help you out with these things because of the emotional aspect of managing your own money. And let me tell you something. When you do start getting into the $3, $4, $5 million range of wealth, if you're doing this on your own and you lose 10%, that's a really difficult morning shave in your face when you lost $500,000 because you were too heavily invested in NVIDIA and it dropped 30%. I do want to remind everybody, because NVIDIA is everyone's darling baby for the past couple of years, when you have a stock that goes up 10 times in a matter of a couple of years ago, you can expect and should expect 30% drop downs from time to time. That's just the animal that you are dealing with when you are investing in high beta companies like NVIDIA. And for those of you out there who don't know what beta is, that is, what's the delta or the change of how it moves, right? So when you have a high beta company, it's going to move naturally up more and down more than normal positions like McDonald's or Johnson and Johnson, like the defensive stocks, right?
Yeah, somebody gave me an analogy yesterday, which was the process of retirement and hiring an advisor is tricky because you don't know if the advisor is LeBron James or some knucklehead down at the park. So you're looking at a basketball player, you're looking at an advisor, and you don't know if the person you're looking at is talented or not. Then you look at a market. that you really don't understand what the vessel is. So you don't know if you just got in a Ford Pinto
Right.
or if you got in a Ferrari.
Right.
Right? So sometimes clients will step into something like NVIDIA thinking, well, I've bought stocks before. Hey, you just jumped in a Ferrari.
Yeah.
And then they're looking at financial advisors and saying, hey, is this LeBron James? Is this Michael Jordan? Is this Kobe Bryant? Or is this some knucklehead at the park? They don't know. So it's such a tricky thing in that the information is not taught. It's not communicated throughout life. And so you're landing in this place where you not only don't understand the person you're working with, but you also don't understand the vessel you're choosing.
Well, there's also another reason why people don't understand what they're investing in, Kyle, is because, speaking finance, it's like a vernacular to the language. Because I would argue if you're watching, MSNBC or CNBC or Fox Business or whatever your news channel of choice is to watch your money, you're probably understanding and digesting about 60% of the words coming out of their mouth, right? Like, what's the difference between CPI and PPI? What's a yield curve? What's an inverted yield curve? How does that relate to the stock market? What are actual tariffs?
So I'm going to admit something to you. I don't know if I've ever told you this before. When I was in college, I kind of got into trading stocks.
Yeah.
And I'm a kid from a small town, so where I come from, the idea of Wall Street's not necessarily there.
Right.
And I don't remember if it was my freshman year or my sophomore year. I don't remember, but I was a young man. And I remember turning on CNBC and just forcing myself to listen and really thinking, I don't know what they're talking about.
That's right.
Because they're having all these discussions with all these words, and I don't know what the words are.
And the acronyms on top of the words, right?
Yeah, so one of the things I hope we do here on the show, and one of the things that's a good reminder when we're working with people, is to be able to not only educate, but continue to work with them. So one of the ways that we solve that here at the Hoffman Financial Group is a lot of financial teams meet you once a year. We want to see you as much as possible. So I have clients that I'm literally meeting with every quarter.
Yes.
And so if you haven't met with your advisor to go through these words, to go through these topics, if you feel any level of panic right now and you're listening to my voice, you can come in for free, have a cup of coffee. We will give you an analysis of where you are, and we will give you that checkup. So if you haven't had it this year, if you hadn't had it in years, this is the moment. Don't wait for the market to be down another 20%, another 5%, another 6%. This is the moment to get clarity, to be concise, to make this decision on where you go next.
Yeah, and if you're unhappy with your positions in your portfolio, and I know this sounds odd, but little dips like this are the best time to make changes, right? Because now you're properly positioned for when it goes up in the right position. And yes, it's absolutely cost-free to come in and talk to us, Kyle. The coffee is fantastic because we grind it for you right there in front of you. But here's the thing. If you're listening out there today and you need these types of solid financial plans put in place for you, Hoffman Financial Group, we designed these specifically for your wishes, wants, and needs. And if you've saved up for retirement and want to see what this plan looks like, let us show you. There's no cost whatsoever. And we'll get to work on building that custom financial plan for you. We come in for a complimentary consultation, and we put this plan to work for you immediately. And guys, we'd love to do an unlimited amount of these, but however we can. There's an incredible amount of work that goes into these types of plans. So what we're going to do today is for the first 10 callers, we're going to put together that full financial plan for you at no cost and no obligation to you. Give us a call and let's get this put into place for you today. 404-640-5511. That's 404-640-5511. Or you can find us online at unleashyourmoney.com.
Eric Johnson and Kyle Allyn are investment advisor representatives of Brookstone Wealth Advisors, LLC, a registered investment advisor and affiliate of Brookstone Capital Management, LLC. BWA and Hoffman Financial Group are affiliated under common ownership. Registered investment advisors and investment advisor representatives act as fiduciaries for all of our investment management clients. We have an obligation to act in the best interest of our clients and to make full disclosures of any conflicts of interest. Please refer to our firm brochure, the ADV2A, page 4, for additional information. The Hoffman Financial Group and WSB are not affiliated. Exposure to ideas and financial vehicles discussed should not be considered investment advice or recommendation to buy or sell any financial vehicle. This information should not be considered tax or legal advice. Individuals should consult with a professional specializing in the field of tax, legal, accounting, or investments regarding the applicability of this information for their situation. Any client experiences discussed during the show are unique to that client. They are not meant to imply or suggest you will experience the same results. Past performance is not a guarantee of future results. Investments will fluctuate and when redeemed may be worth more or less than when originally invested. Any comments regarding safe and secure products and guaranteed income streams refer only to fixed insurance products. They do not refer in any way to securities or investment advisory products. Fixed insurance and annuity product guarantees are subject to the claims paying ability of the issuing company and are not offered by Brookstone. Index or fixed annuities are not designed for short-term investments and may be subject to caps, restrictions, fees, and surrender charges as described in the annuity contract. Please refer to our firm brochure, the ADV2A Item 4, for additional information. Hoffman Financial Group is not affiliated with or endorsed by the Social Security Administration or any other government agency. Insurance licensed in Georgia, number 163546.